Good morning, everyone. Before we begin, is everyone ready for today's board presentation?
Yes, I'm ready. I've completed the liquidity and efficiency ratio analysis and all the figures have been checked.
Same here, the solvency and market ratio analysis also has been reviewed.
Everything is ready from my side as well, including the conclusion and investment recommendation.
Since we're all set, shall we briefly introduce ourselves before the board meeting starts?
That's a great idea. I will start first. I am Zahira, the Senior Financial Analyst. I will be presenting the company background and SWOT analysis.
I'm Abiana Faima, the financial analyst. My role is to present the liquidity and efficiency ratio analysis of Fraser and Neff Holdings Berhad and Spritzer Berhad.
I am Anis, the investment analyst. I will be presenting the solvency and market ratio analysis.
And I'm Siti Zubaidah, the finance manager. I'll conclude today's presentation with our findings and investment recommendation.
I think the board has joined the meeting.
Great. Good morning, respected members of the Board of Directors. Thank you for joining us today. Today, we'll be presenting our financial analysis of Fraser and Neff Holdings Berhad and Spritzer Berhad based on their 2025 financial performance, followed by our investment recommendation. If there are no further questions, let's begin with the company background. Good morning, respected members of the Board of Directors and lecturers. My name is Nur Zahira, and I will begin today's presentation by introducing the two companies selected for our financial ratio analysis, namely Fraser and Neff Holdings Berhad or FNN and Spritzer Berhad. In this section, I will briefly discuss the company backgrounds, their business nature, the industry overview, followed by a SWOT analysis and our strategic recommendations. Let's begin by comparing the backgrounds of both companies. FNN was established in 1883 and is one of the Malaysia's oldest and most established food and beverage companies. Today, it operates across several Southeast Asian countries including Malaysia, Thailand, Vietnam, and Singapore. The company has built a strong reputation through its diversified product portfolio and continuous investment in innovation and sustainability. In comparison, Spritzer was founded in 1989 and has grown into Malaysia's leading bottled natural mineral water producer. Its water is sourced from a protected rainforest in Taiping, Perak, giving the company a strong competitive advantage in terms of quality, safety, and customer trust. Although both companies operate in the same industry, they adopt different business strategies, which makes this comparison meaningful. Moving on to their business nature and main products, FNN offers a highly diversified product portfolio. Its products include dairy products, ready-to-drink beverages, carbonated drinks, isotonic drinks, tea, juice, ice cream, and various food products under well-known brands such as FNN, 100 Plus, Magnolia, and Seasons. This diversification allows FNN to generate revenue from multiple product categories while reducing dependence on a single source of income. On the other hand, Spritzer focuses mainly on bottled water and healthy beverages, including natural mineral water, sparkling water, distilled water, and functional drinks. Although its product range is smaller than FNN, Spritzer has successfully established itself as the market leader in Malaysia bottled water segment. Therefore, FNN competes through diversification, while Spritzer competes through specialization. To better understand the environment in which these companies operate, we also examine the industry overview. The Malaysian consumer products and services sector remains one of the country's most resilient industries. Growth is driven by population growth, urbanization, increasing disposable income, and greater consumer awareness of healthier lifestyle. However, companies also face several challenges including raising raw materials prices, transportation costs, labor shortage, and stricter environmental regulations. To remain competitive, companies are investing in product innovation, digital transformation, sustainable packaging, and operational efficiency. These long-term trends create significant growth opportunity for both FNN and Spritzer. Next, we evaluated both companies using a SWOT analysis. For FNN, its greatest strength lies in its diversified product portfolio, strong brand recognition, and extensive distribution network across Southeast Asia. However, the company also faces higher operating costs and increasing pressure from changing consumer preferences towards healthier products. For Spritzer, Its key strength is its leadership in Malaysia bottled mineral water market, supported by its protected natural water source and strong consumer confidence. Nevertheless, Spritzer has a relatively limited product portfolio, making it more dependent on bottled water sales. Looking ahead, both companies have strong opportunities through healthier beverage innovation and sustainable product development. At the same time, they must also manage risks such as increasing competition, rising production costs, and stricter environmental regulations. Based on our analysis, we recommend that FNN continue expanding its healthy beverage portfolio, strengthen its digital sales channels, and invest further in automation and sustainable packaging to improve long-term competitiveness. For Spritzer, we recommend diversifying its product portfolio beyond bottled water, expanding into international markets, and continuing to invest in eco-friendly packaging and strategic partnerships. This initiative will help both companies strengthen their competitive position, improve long-term profitability, and create greater value for shareholders. That concludes my presentation. I will now hand over to the next presenter who will explain the financial ratio analysis in greater detail. Thank you.
Thank you, Nur Zahira, for presenting the introduction, SWOT analysis, and recommendation for both companies. Good morning once again, respected Board of Directors. My name is Abiana Faima, and I will now present the financial ratio analysis, beginning with the liquidity ratios of Fraser and Neff Holdings Berhad, or FNN and Spritzer Berhad. Liquidity ratios evaluate a company's ability to meet its short-term financial obligation using its current asset. Strong liquidity indicates that a company has sufficient resources to settle its current liabilities when they become due. Therefore, we analyze two key liquidity ratios, namely the current ratio and the quick ratio. Let's begin with the current ratio. FNN recorded a current ratio of 2.01 times, while Spritzer recorded 1.93 times. Since both ratios are above 1, both companies demonstrate healthy liquidity positions and are financially capable of meeting their short-term obligations. However, FNN shows a slightly stronger liquidity positions because it holds a larger buffer of current assets for every ringgit of current liabilities. Moving on to the quick ratio, this ratio excludes inventories and focuses only on the company's most liquid assets. In this case, Spritzer achieved a quick ratio of 1.60 times compared with FNN's 1.38 times. This indicates that Spritzer has a slightly stronger ability to settle its short-term obligation without relying on inventory sales. Overall, both companies maintain sound liquidity positions, with FNN performing slightly better in the current ratio, while Spritzer demonstrates stronger immediate liquidity through the quick ratio. Next, I will present the efficiency ratios, which evaluate how effectively each company utilizes its assets and resources to support daily operation and generate revenue. First is the inventory turnover ratio. Spritzer recorded 6.68 times compared with FNN's 4.05 times. This suggests that Spritzer converts its inventory into sales more frequently, reflecting stronger inventory management and lower inventory holding costs. This finding is further supported by the average days in inventory. Spritzer requires approximately 55 days to sell its inventory, whereas FNN requires about 90 days. Although FNN's inventory cycle is longer, this is largely due to its wider product portfolio and larger operational scale rather than inefficient inventory management. Next, we analyze the receivables turnover ratio and the average collection period. FNN recorded a receivables turnover ratio of 9.65 times, while Spritzer recorded 5.23 times. This indicates that FNN collected outstanding payments from customers more efficiently throughout the financial year. As a result, FNN required only about 38 days to collect its receivables, compared with approximately 70 days for Spritzer. Faster collection strengthens cash flow, improves working capital, and reduces the risk of overdue accounts. Finally, the total assets turnover ratio measures how efficiently a company utilizes its assets to generate revenue. FNN achieved a ratio of 1.02 times, whereas Spritzer recorded 0.56 times. This means that FNN generated a higher revenue from every ringgit invested in assets, demonstrating stronger assets utilization and overall operational efficiency. Overall, both companies demonstrated sound financial performance in terms of liquidity and efficiency. From the liquidity perspective, FNN maintained a slightly stronger current ratio, while Spritzer performed better in the quick ratio due to its higher proportion of liquid assets. For efficiency, Spritzer outperformed F&N in inventory turnover and average days in inventory, indicating more efficient inventory management. However, F&N achieved stronger results in receivable turnover, average collection period, and total asset turnover, reflecting better receivables management, stronger working capital, and more effective utilization of assets to generate revenue. Based on these findings, we conclude that F&N demonstrated stronger overall operational efficiency, while Spritzer's primary strength lies in inventory management. That concludes my presentation. Thank you for your attention. I would now like to invite our next presenter to continue with the solvency ratio analysis and market ratio analysis, Anis Nadira.
Thank you, Abiana Fahima, for the liquidity and efficiency analysis. I will continue for the solvency and market ratio for both companies. Solvency ratio show if a company can meet a long-term financial obligation. First, the debt ratio formula is total liability divided by total asset. Based on the data, Spritzer record a debt ratio of 24%, while FNN record a 31%. Both scores are well below by 50%, which proves that both companies are safe and have a stable capital structure. Next, we will look at the debt to equity ratio, which is total liability divided by the total equity. For this ratio, Spritzer record 31%, whereas FNN generates a ratio of 45%. This means for every RM1 shareholder capital, FNN holds 45 cents of debt compared to only 31 cents for Spritzer. Both numbers are low, showing the both company manage their financial risk very well. The third solvency metric is time interest earned, calculated as EBIT divided by interest expense. This ratio measures how easily a company can pay its bank interest. Here, FNN record a coverage ratio of 50.37 times, while Spritzer achieved 58.77 times. Usually, a score of 2 or 3 times is already safe. Since both company exceed a 50 times, it's guaranteed that neither firm runs any risk of defaulting on their interest payment. Now let us move to the market ratio, starting with earning per share or EPS. The formula is net profit divided by ordinary share outstanding. Our data show that FNN established an EPS of 138.19 cents, while Spritzer trade 40 ringgit 30 cents. FNN deliver much higher return per stock unit due to its tight share structure. However, both companies show a very consistent net profit performance. Finally, we have the price earning ratio, which is market share price divided by EPS. This tells us how much investors pay for every RM1 of profit. FNN set a price earning ratio of 23.36 times, while Spritzer trade a lower multiple of 18.67 times. This means FNN price is a premium blue chip asset, while Spritzer offer a lower entry valuation multiple for investor. In conclusion, both companies demonstrate a strong financial health and excellent long-term solvency safety. Now I will hand over to the member 4 for the profitability and
Let's turn our attention to section 4.0 of the performance review, analyzing the comparative profitability and asset efficiency metrics between FNN and Spritzer Berhad. This evaluation highlights a fascinating contrast in structural unit economics. Looking first at gross profit margin, we see a massive structural divergence. Spritzer records an exceptionally high GPM of 71.55%, while FNN operates at a much tighter 31.89%. This variance is entirely dictated by raw material profiles. Spritzer's cost product is natural mineral water, meaning its direct cost of goods sold is decoupled from commodity markets, requiring only extraction, treatment, and packaging. FNN conversely manage a diversified food and beverage portfolio heavily exposed to highly volatile, market-traded agricultural commodities like sugar and dairy solids. However, at the bottom line, the net profit margin converges significantly, with Spritzer at 13.82% versus FNN's 9.89%. This narrowing gap indicates that Spritzer faces higher operating, selling, and distribution overheads relative to its scale as bottled water, is a heavy, low-value density product requiring extensive domestic logistics. FNN, on the flip side, successfully leverages massive regional economies of scale and an optimized Asian distribution network. Next, evaluating capital efficiency, the return on equity for both organizations is incredibly competitive, with Spritzer achieving 13.80% and FNN at 13.31%. This signals that both management teams are exceptionally capable of generating net profits from direct shareholder capital. Finally, looking at total asset efficiency, Spritzer slightly outperforms FNN, delivering a return on asset of 10.52%, against FNN's 9.16%. This proves Spritzer's agility in deploying its total asset portfolio, including its automated production lines and water source lens, to extract net income. FNN's slightly lower ROA is typical of a sprawling industrial conglomerate, with massive diversified manufacturing sites that require higher absolute volume turnover to generate equivalent efficiency. Lastly, for conclusion, Spritzer exhibits exceptional liquidity and solvency strength, providing excellent financial flexibility. We maintain a strong short-term liquidity position with a current ratio of 1.9 and conservative debt-to-equity ratio at 1.0, leaving us with substantial unused borrowing capacity. This clean balance sheet ensures zero upheaval in our capital deployment. It allows us to comfortably fund internal plant scaling and warehouse automation without introducing any volatility into our day-to-day cash flow. FNN, by comparison, faces heavy capital concentration. Their regional expansion, specifically the Agri Valley Integrated Dairy Farm, temporarily chokes off large amounts of corporate cash and restricts their immediate liquidity. In summary, our strategic takeaway is clear. Spritzer operates as an agile cash generator, combining a smooth internal growth runway with a highly disciplined, stable dividend payout of 35.09%. Based on our overall financial analysis, both Fraser and Neff Holdings Berhad FNN and Spritzer Berhad in 2025 have shown strong financial performance. However, I believe FNN offers a stronger investment opportunity due to its more consistent financial performance and long-term growth potential.
I agree. From the liquidity and efficiency analysis, I believe FNN demonstrated stronger overall performance, particularly in receivables management and asset utilization. At the same time, Spritzer also performed well, especially in inventory management.
For an investment perspective, I believe our analysis provides a fair comparison between FNN and Spritzer. Every company has its own strength, but based on the financial evidence, FNN appears to be a stronger choice.
Thank you, everyone. On behalf of our financial analysis team, thank you to the board of directors for your time and attention. We hope our analysis of Fraser and Neff Holdings Berhad and Spritzer Berhad has provided a valuable insight to support your investment decision. This concludes today's presentation. Thank you and have a great time.